When you are investing from a pool of capital that is tax advantaged, like a retirement account, how does that change how you might think about the kinds of investments or the ways in which you would invest?
Yes, absolutely. There are certain types of strategies where an investor is absolutely going to benefit if they can invest with tax advantaged dollars. And so I think of certain strategies that are more trading oriented or trading heavy. They're going to generate a lot of interim short-term gains. Those types of trading oriented strategies that oftentimes can be found in hedge funds. Again, this is why I think endowments and foundations have been longtime investors in hedge funds. The ability to generate and receive those returns without tax implications is a pretty big advantage. After tax returns on some of those strategies can really look quite different. And so there are certain strategies where it makes so much more sense to be able to invest in if you can do so with tax advantaged dollars. High income oriented strategies, because income is taxed at a much higher rate than long-term capital gains, then it is a net benefit to be able to invest in those strategies with the tax advantage dollars. On the flip side of it, actually, you can think of things that generate really high outsized returns where being able to collect on those returns without a tax consequence is enormously beneficial, right? So the ability to invest in something that can generate outsized returns, say in like venture, and then to not have to pay taxes on those gains if you are investing Roth IRA dollars that could invest into venture type investments and the outsized gains that you could generate that would not be subject to any sort of taxable consequence. You can think of sort of on many ends of the spectrum. There are ones that are explicitly have big differentials in returns between tax advantage and taxable dollars, and then there are others where it's just you can generate the potential for such high returns that to be able to do so without a tax consequence is meaningful because of the size of the potential tax consequence, because the size of the returns.